Hi everybody, Brian Foote here to talk a little bit more about convexity investing and some recent updates that I have to this program. Thank you for joining. Remember to click subscribe below, and there are links throughout this YouTube channel where you could find out more about me. You can sign up for upcoming courses, and of course you could buy my book, which I've mentioned before, available on Amazon. Recently, I've seen a lot of news about the price of gold, and everybody seems to have an opinion about the price of gold and the antecedent gold mining. These are interesting companies to follow because underlying the business is a commodity, easily and readily priced. You can look at the price of gold every day. The excitement that often comes from owning these type of companies comes from new discoveries, new delineations of gold, and of course the ultimate goal is to get the gold out of the ground, mine it, and sell it into the market. There's costs associated with this, and the interesting piece of following mining companies is that once you have a price in your mind of the commodity over time, you have a forecast of your commodity price, you have a concept of what it's going to cost to get that commodity out, the all-in costs, you have a cash flow attached, right? Revenue minus cost equals roughly your operating cash flow. There's of course the sustaining cash flow required, the Capex, capital expenditures to keep those mines open, and then an exploration budget that ties to the future, if possible or if probable, discoveries. Why is this relevant to our case? Well, at its simplest form, a gold mine is a company that combines the ingredients of both, in the long run, a steady cash flowing business where you can model the revenues and you can model the expenses. It's pretty simple. You're digging gold out of the ground and processing it. The metal itself has a price that's out in the market. Now you could say the same thing about oil and gas and really any natural resource. There's a commodity price out there, and there's the costs both to produce it and develop it, as well as the final cost, which is to explore for more of it. So there's three components of cost there. So recent discoveries that people have made in the price of in the gold mining sector often don't reflect immediately in the price of the stock. Just like an announcement of a new product at a company doesn't necessarily move the stock. Why is that? Well, the market is betting that maybe the costs go up. They're betting that maybe the costs are going to be more than people currently estimate. Again, it's the same thing that if a company involved in releasing a new product for new software, a new movie title, etc., they've invested an awful lot to make that discovery or to produce that movie or to produce that software, but the actual cash flows related to that in the future are not easily determined. Gold mine is a term often given to a great business, right? Gold mining is potentially very capital intensive. It's certainly not easy to explore for gold, and even when a great discovery is made and they tell you how many ounces they think they've found, there's years and years and political and geologic and operational risk that's out there. But I find analyzing that type of business to be fascinating, and wanted to share with you a bit. We'll explore a lot more of this in my. We do explore a lot more of this in my book, and which I'd love you to have. But we'll be exploring it as well on this channel and in an upcoming classes. So we'd love you to join. Again, click to subscribe and click through, buy the book, and we'll talk soon. Thanks.